Hello and welcome back to our session on IFRS 16 Compliance with Hamilton Engine by Cognitus. Today we'll be showing on how to simulate the bargain purchase option on IFRS 16 using our solution. My name is Zati and I am an IFRS 16 subject matter expert, part of Hamilton team in Lease accounting. So first off, the bargain purchase option exists when the lessee has the opportunity to buy the asset that they are leasing for a very cheap price at the end of the lease. So let's say a lessee has taken a Ferrari sport car for a fixed rental of 1,000 currency unit per month payable at the beginning of each month. The lease commences on 1st January 2019 until 31st December 2028. The incremental borrowing rate is 6% per annum at the commencement date. So after 5 years, the lessor tells the lessee that at the end of the lease contract, the lessee can buy this asset for 15,000 currency unit, which is substantially lower than expected future fair price of the asset. At this time, the entity is reasonably certain to exercise the purchase option and incremental borrowing rate is 7% per annum, and also for the economic life of the asset is 12 years. As you can see in the next slide, this table shows that the lease amortization schedule based on the example given, where the beginning balance of lease liability is 91,166 with 6% of incremental borrowing rate. Total of lease payment is 120,000 and it will amortize for 12,000 currency unit at the beginning of every 10 years. Same goes to the asset depreciation schedule, where it will depreciate for 9,117 on the straight line basis from 2019 until the year 2028 contract term, without consider any bargain purchase option. So continuing to the example, after 5 years, the lessee is reasonably certain to exercise the purchase option, and it is definitely going to have a couple of effects on the accounting. So the first is that the lessee is going to include the present value of the bargain purchase price in the lease liability. And the second is that we need to deal with the annual depreciation, which is the lessee need to amortize the asset over its entire economic life. So as you can see at the end of the contract, a new straight line depreciation has been calculated because of the additional liability, which is 15,000 currency unit at the end of the contract, with 7% discount rate, which is 8,040 currency unit, and additional 2 years is extended to the life of the asset after lease contract has been ended. So now let's start to load the inception contract in Hamilton Engine and see if the numbers are matched. So, as all of you know, to load the contract, we have to prepare the Excel file and enter all the contract information that not consider the bargain purchase option. So for this case, we're going to use LU01 for inception case. Classification and variant is the group lease, lease agreement ID, lease ID, and the start date and date of the original contract term, which is 1st January 2019 until 31st December 2028, with the rental of 1,000 currency unit payable at the beginning of each month. For the full step on how to prepare the Excel file, you can check out our previous video at the link in the description section as below. So without any further, the Excel now is ready to load and create a contract in the engine. So just go to your SAP by running the code /cogn/16tc_raw_excel. From here, just browsing your file and execute with process immediately. So now the contract has been created. Just go to the main dashboard by running the code /cogn/16tc 16TC underscore LCD. So just specify one on the bar at the top of the screen to show the letter contract in the engine. This is our contract with the number of 17103. To see the detail of the lease schedule, just select this contract and click on the schedule. So here the lease schedule is showing in contract period where the lease liability is 120,000 and it will amortize for 1,000 per month for the whole 10 years. While the beginning for ROU asset is 91,165.97 and it will depreciate around 9,117 until year 2028 on the straight line basis. To see the effect per year, you can change the period to contract year and execute. So right here, you'll see the rental is 12,000 per year and the asset will be depreciate around 9,117 for every 10 years. This lease schedule should without consider any bargain purchase option. So to see the impact after 5 years, we have to run the program /cogn/16tc underscore VC mod, which is on special consideration of revaluation. So here in this screen, we have to specify certain field. For the use case ID, we're going to use LBUY, which is stand for bargain purchase option, our contract number, which is 17103, our lease type is office underscore R, the item number is 1, the date when the lease is reasonably certain to exercise the purchase option, which is 1st January 2024, with the incremental borrowing rate of 7%, and the amount of 15,000 currency unit. So the second section is to specify the economic life of the asset, whether is it longer than the lease tenure or same as the lease tenure. So for our case, it's longer than lease tenure, which is 31st December 2030, which is 12 years in total from our contract tenure. And also, we need to specify the payment date, whether is it any future date or lease end date. So in our contract has already specified that the lease can buy the asset at the end of the contract term for 15,000 currency unit. So we choose the second option and click on execute. So now the contract has been remeasured based on the bargain purchase option information. And to see the lease schedule detail, for all year, just run /cogn/16tc underscore LCD. Right here, just specify our contract number and enter, select this contract and click on lease schedule. So now we can see at the year of 2024, the contract has been remeasured, where the depreciation has been recalculated based on the additional liability with the amount of 15,000 currency unit. And note that we have one final payment at the year of 2028 with the amount of 27 currency unit, which include bargain purchase option amount. And then our lease liability based on the contract tenure will be 0, which means no more payment after that. However, at the end of the year, we have additional 2 years of the life of the asset. So the asset will be depreciated up until 2030 for 8,040 currency unit. And this is how we simulate the bargain purchase option using Hamilton agent. So if we go back to our presentation slide, we can see that the amounts are matched. And this is proven that the Hamilton engine is the perfect solution for this use case. And I think this is the end of our session. If you haven't watched our other video on IFRS 16 use case, you can click the link on the description below. And just let us know if you have any question by commenting down below. And do subscribe to our channel, and thank you very much for watching.